Good afternoon, James Preston with you, and thanks for tuning in to 𝐊𝐿𝐴N TV, live from our studios in Sydney. This is the Mid-Market Poll Show. Let's see how the Australian equity market is trading today and look at the top trending stocks. Australian shares were trading higher by Monday afternoon, tracking a strong lead from Wall Street, with the US jobs data showing that the Fed is unlikely to raise rates anytime soon. The persistent concerns over rising COVID-19 cases restricted the market's gain. New South Wales has reported 35 new locally transmitted COVID-19 cases in the past 24 hours. The S&P ASX 200 was trading higher by 18.8 points, or 0.26% at 7,327 during the mid-market session. Earlier today, the index opened higher at 7,308 and gained as much as 0.5% to hit an intraday high of 7,343. Moving on to the sectoral front, and 7 of the 11 sectoral indices were trading in green. The industrial sector was the best performer with a 5.3% gain. Among others, utilities, energy, AREITs and consumer staples were also notable gainers. Meanwhile, telecom was the top loser on the ASX, falling 0.5%. Among others, consumer discretionary and financials were among the top laggards. On that note, let's now take a look at the stocks that are in focus today. Shares of biopharmaceutical company Star Pharma Holdings dropped 4.7% to $1.40 after Australia's medicine regulator imposed a fine of $100,000 for alleged unlawful advertising of its COVID-fighting antiviral nasal spray. The development came weeks after the UK regulator had raised concerns about promotions of the product. The Melbourne-based biotech firm said that it has received several infringement notices from the Therapeutic Goods Administration for illegal advertising of its nasal spray 𝐕𝐼𝐼𝐼 to Australian consumers. The total amount of the infringement notices is $93,240. Star Pharma allegedly promoted its nasal spray through its website and YouTube channel, even though the product was not permitted for use in Australia. The advertisement included a restricted representation claiming that 𝐕𝐼𝐼𝐼 is an antiviral nasal spray that stops COVID-19, while no relevant authorization had been granted for the advertised claims of the same. Responding to the regulator's action, the drug maker said that it has immediately acted to prevent Australian consumers from accessing the alleged infringing information from the 𝐕𝐼𝐼𝐼 product website. Moving on, and the shares of Sydney Airport jumped 30% to $7.60 after the company received $22 billion in a takeover bid from an infrastructure consortium. The Sydney Kingsford Smith Airport operator said it has received an $8.25 per share takeover bid from a consortium of infrastructure investors, including FIM Investors and Q Super. The consortium comprises of FIM Investors as trustee for IFM Australian Infrastructure Fund, Cayman as trustee for IFM Global Infrastructure Fund, Q Superboard as trustee for Q Super and Global Infrastructure Management. The board of the debt-ridden airport said it would assess the proposal that came during a global pandemic which has deeply affected the aviation industry and the Sydney Airport security price. As per the board, the offer price is below where Sydney Airport shares traded during the pre-COVID period. Let's now look at the next share, in Sydney-based Australian company Airtasker rose 4.5% to $1.17 after the classifieds workplace upgraded its gross marketplace volume guidance. The company expects its gross marketplace volume to be between $148 and $152 million. The company, however, maintained costs below prospectus forecasts, saying that the current lockdowns would lead to a, quote, softer start to fiscal year 2022. The company added that there would be no impact on full-year targets due to the strong marketplace performance and pattern of sharp recovery from prior lockdowns. Moving on to the next company, and the share price of Corvest Limited jumped 3.6% to $5.15 after the engineered solutions provider raised its profit guidance for the half-year ending financial year 2021. The company has raised its second half 21 profit guidance to between $4.4 million and $4.7 million, citing increased activity over May and June, especially across East Coast engineering and infrastructure projects. And now, before we take a look at some more trending stocks, it's time for a very small break, but stay tuned as I'll be back with you in just a moment on 𝐊𝐿𝐴N TV.
Crypto talk by 𝐊𝐚𝐥𝐤𝐢𝐧𝐞. The crypto market has been red hot, given the Bitcoin rally since the past year. And now the most famous cryptocurrency has got competitors, Dogecoin and Ethereum. If the crypto market excites you, tune in with me, Sage, to know the latest developments about the existing digital currencies and the new ones that are joining the race. I'll help you understand the opportunities and the risks the crypto market has in store for you. For all the digital currency related developments, continue watching Crypto Talk by 𝐊𝐚𝐥𝐤𝐢𝐧𝐞.
Great to have your company this afternoon. James Preston with you for the Mid-Market Pulse on 𝐊𝐚𝐥 TV, live from our studios in Sydney. Let's now continue with the trending stocks. Shares of Insurance Australia Group Limited dropped 0.4% to $5 after the insurer finalised its aggregate reinsurance cover for the fiscal year of 2022. As per the company release, the 2022 aggregate cover will provide protection of $350 million in excess of $400 million, with individual qualifying events capped at $200 million over $50 million per event. The share price of Stockland traded marginally higher at $4.70 after the real estate firm admitted it was in talks to buy Helicon Group's land lease communities business for an undisclosed value. Moving on to the next company, and risk management group Ava Risk Group saw its shares surging 12% to 46.5 Australian cents on the back of raising its profit guidance. The group has hiked its fiscal year 21 profit guidance to earnings before interest, taxes, depreciation and amortisation between $14.8 million to $15.8 million on the revenue of $64.8 million. Shifting gears, and shares of HomeCo Daily Needs REIT have entered a trading halt, pending an announcement related to an acquisition. The company has acquired a 100% stake in Town Centre Victoria Point for $160 million. The firm said that it would undertake a fully underwritten institutional placement to $70 million via placement at an issue price of $1.45 apiece to fund the acquisition and associated transaction costs. Moving on to the next company, and shares of Crown Resorts Limited fell 0.4% to $11.87 after Australia's largest gaming and entertainment group warned that its fiscal year 2021 earnings will be impacted by the COVID-19 pandemic. The company expects to report theoretical earnings before interest, taxes, depreciation and amortisation of between $240 to $250 million. It expects to record a statutory loss after tax for the full year ending the 30th of June, with the results subject to review. Moving to the wagering space, and Tabcorp Holdings fell 4.2% to $4.98 after the gambling group unveiled its business demerger plan. The company confirmed it plans to demerge its lotteries and Keno businesses to create two standalone market-leading ASX listed companies operating lotteries and sports bettings respectively. Also, shares of QUB Holdings Limited rose 0.6% to $3.19 after the logistics group announced its plans to sell its Moorebank Logistics Park property to Logos Property Group for $1.67 billion. The Logos Group comprises investors from Australian Super, T Corp, Ivanhoe Cambridge and Ava Altus. And now, before we take a quick look at the electric vehicle sector, it's time for another short break here at 𝐊𝐚𝐥 TV.
New Zealand is unique, and 𝐊𝐚𝐥 TV is here to bring you all the latest news and trending market updates. Streaming across multiple platforms, so no matter where you are, whether it be at the beach or on the farm, you can count on the team here at 𝐊𝐴 TV to be your home for accessing the latest valuable insights into global issues that are affecting New Zealanders. Subscribe to our channels across YouTube, Facebook, also visit 𝐊𝐴.co.nz.
Hello, welcome back. James Preston with you. You're watching 𝐊𝐴 TV live from our studios in Sydney, and this is the Mid-Market Pulse. Let's have a quick look at some electric vehicle stocks that are now trending. The battery metals exploration and development company Sayona Mining has recently launched a joint venture with Piedmont Lithium for the North American lithium mine to create a mega Abitibi lithium complex. The company has offered a massive 52-week market return of around 860%. Moving on to the next stock, and European Lithium is involved in the Phase 2 resource extension drilling program at the Wolfsberg Lithium project with an objective to extend its existing JORC compliant reserves for the definitive feasibility study. And looking at EcoGraph, it's a focused graphite player which envisions to tap the graphite market end-to-end, right from the graphite mining project in Africa to the development of spherical graphite products for electric vehicles in homeland Australia. Spherical graphite is widely used as the precursor for battery anodes in electric vehicles. And before I take a quick leave before our next program, let's just finish up by taking a glance at the Asian markets. Asian markets opened mostly higher today as investors cheered US job data which shrugged off rate hike concerns. However, the persistent pandemic situation in the region weighed on market sentiment. Japan's Nikkei was trading 0.6% lower, while China's Shanghai Composite rose 0.4%. Meanwhile, Hong Kong's Hang Seng was up 0.05%, while Taiwan's weighted index traded 0.8% higher. New Zealand's benchmark S&P NZX 50 rose 7%, and Singapore's Straits Times was up 0.15%. On Friday, all the three major US stocks ended higher. The Dow Jones rose 0.44%, the S&P 500 gained 0.75%, and the Nasdaq Composite added 0.81%. Well, that's all for now, but stay tuned for more live updates on 𝐊𝐴LKINE TV across the economy, markets and sectors. We'll be back with our next show in just a moment, the Market Movers program.